Markets now, shares in Asia were mixed. The Hang Seng Index closing up 1% actually, recovering partially from heavy losses earlier in the week. Still, the index declined nearly 5% for the week amid regulatory concerns surrounding sectors such as technology and casinos. Over on the European side, markets were also mixed as global investors continue to weigh the prospect of slowing economic growth. Stateside, stock futures were muted in early pre-market trading as investors remain cautious during the traditionally weak month of September. Investors in recent days have been reacting to softer U.S. inflation data, which tempered expectations of imminent tapering of asset purchases by the Fed. For more on the week that was and some of the themes that have flowed through, we are joined by our market watcher, Warwick Lucas from Galileo Capital. Warwick, thank you so much for your time. Let's check in on the JSE in light of this background that I've just painted with what's happening in Asia, as well as this sort of cautious mood that's moving through the markets.
Right, so we're looking at an environment in which China is looking a little bit slower on its economic news there, and this is flowing through into commodities, and particularly South Africa's commodity portfolio, which is substantially in iron ore and platinum, and this is a bit of a deviance from the rest of the sort of global commodity complex. I mean, the CRB index is still keeping on going higher, so it seems that we're suffering some fairly specific issues this month.
So when you look at some of the themes that, flowed through this week, we touched on one right now, which being China. We also had U.S. jobless claims. We had most central bank officials talking about, calling for monetary policy tightening, as well as on the other side, when you look at what's happening in the oil price, there was a big drop in inventories. But apart from that, were there any, particular themes that came through this week that caught your attention?
Okay, so there's quite a lot. I mean, our U.S. retail sales have been a slightly bit better than expected. At the same time, some of your early signaling U.S. industrials, the more sort of economically sensitive ones, have noted a few supply chain problems and some cost pressures there. And I think generally there's quite a lot of tensions rising in the U.S. as Biden struggles to get his mix of stimulus packages, managing debt ceilings, and tax reform all to play ballet instead of hockey. So it's gotten quite messy. And I think a theme at the fringes as well is one needs to be a little bit concerned about the Democrats' discussion around potential taxation of U.S. share buybacks. I mean, share buybacks have been a fairly handy part of performance of U.S. stock markets, and a tax there might substantially cramp that area.
Right. What's your thought or feeling around SA Inc. stocks? Are you seeing opportunities there?
Look, I mean, we're still seeing some recovery there. I mean, the latest trading update from Spur, for example, looking positive. First round results looking great. So I mean, clearly there's a nice bounce back here, but it is a bounce back from a very low base. And I think the key issue is that South Africa continues to maintain some kind of positive momentum going forward. We need things like the issue of spectrum to resolve itself, and we need ongoing improvements at Eskom to both supply more power and to do so more efficiently, because failure to do so will then act as a natural cramp on the economy, and you don't even need the central bank then to rein any party in, because the party will be pooped anyway.
Right. Before I let you go, I can imagine there's a lot of events that you're keeping tabs on your screen, but one that comes to mind in terms of key events that you're watching, maybe as we wrap up the week or even going into next week.
Look, I think the broad theme that matters is that China has taken over the role of the world's economic flywheel, the one that kicks when things are down and it starts lifting everyone up. We saw that after 2008. We saw it again in relation to the COVID recession, and obviously excessive downside there is concerning, and it is a space that I'm certainly watching very closely.
All right, Warwick, thank you so much for your time. That is Warwick Lucas from Galileo Capital talking to us about the week that was, some of the themes that have flowed through, and of course what he is looking forward to going into next week. We're going to take a break. Your Money and SME and Points are coming up with Deposit.